There's been a big disappointment this morning at BP for its third quarter results, falling far short of expectations. Let's take a look at the figures because the company looks at the underlying replacement cost profit, or here you can see it's called adjusted net profit, at $3.25 billion. Now, the markets through Bloomberg survey suggesting we should see something in excess of $4 billion for the third quarter. So this is a big disappointment. Now, in terms of other news, there's been a further $1.5 billion share buyback program initiated, meaning that investors should see a little bit of a boost to shares because what it does is it essentially takes shares off the market. The company says it expects oil prices to be supported in the fourth quarter by OPEC plus production restrictions and continued demand rebound. But we're seeing some economic evidence today to suggest that China is still finding the going tough, and that's where one of the big centers of demand is. And if that's anything to go by, then there is a real problem. Let's take a look at the share price chart, because out of the gate this morning, we saw it down. It's not too far off the lows today. We did disappear below this red wavy line here, which is the 200-day moving average at one point almost or just below the £5 level. It's gone back up above £5 a share. But this area of support down here at 506 was always going to be interesting on the Fibonacci here as a 76.4% retracement. And that's pretty much where we are in terms of the moves we've seen. MACD pointing lower, indicating that technically speaking, people are looking for good prices to sell. BP not too far away from recent highs at 586 recently, but this little bit of a pullback is on direct connection to the poor number today for third quarter adjusted net profit.